Good morning, folks. This is the Danielcode weekly gold bulletin for the 27th of October. My name is John Needham. I'll be your host for today. Well, we need to consider a little bit with these markets now some external forces that are not usually prevalent, and what we're seeing in all commodities is forced selling, forced liquidation. All commodities have been getting hammered as the carry trades have been getting unwound. Now, precious metals are not exempt from this. There's been a lot of the carry trade run in precious metals, and even though they don't have a return or yield as such, the mere fact that it's been in a bull market, the capital appreciation, has led to untold amounts of speculative buying and carry trade with the very, very cheap interest rates and Japanese yen carry. So we're undoubtedly seeing some unwinding of those positions and maybe some forced selling, liquidation perhaps by hedge funds, but the fact is there is constant downward pressure on these precious metals, gold, silver and Huey. Let's have a look at our charts, and we'll start as we always do by going from the longer period and working backwards. The monthly chart, the monthly trend chart of gold remains on its sell signal as it has been since March, and we will require a monthly close above 934.70 to change or get rid of that existing sell signal. On the weekly COMEX gold chart, you can see that it still stays on its weekly sell signal, and the sell failure point is now 816.30. We would require a weekly close above 816.30 to invalidate the current sell signal. Huey, our next chart, the monthly chart for Huey, the Amex Gold Bugs Index, is taking a real hammering. It maintains its sell signal, of course, on the monthly chart and also on the weekly chart, and for the weekly Huey trend chart, the failure point has moved down quite considerably and it's now at 226.90. You'll remember in last week's weekly gold bulletin I told you that gold was on a weekly and daily sell signal, and that absent a TO3 reversal signal we were looking for gold to go lower. You remember that from last Tuesday's bulletin. And in fact that's what's happened. Gold's gone considerably lower during last week until on Friday we got a TO3 buy signal and the market duly reversed. We'll get to that in a minute. Let's move on and look at our weekly chart for COMEX gold. You can see down there that there are two black lines at the bottom of the chart, 650.40 and 613.50. They are the final levels of Danielcode support for the existing swing. So there's gold is a long way away from those sorts of failure points. Huey, however, is not. If you look at the Huey chart, the Huey weekly chart, you will see that there's a black line there at 88.59, and that is the last level of Danielcode support for the major swing. That, as we've seen on all markets, is a very, very important support line. Right now Huey's sitting at 145 odd, just on the 2 degrees of Danielcode support, but it's quite possible that it will go down further to $88.59, and what happens there will largely tell the story of its future. There are some particular problems with the precious metal miners, because not only are they being impacted by the falling commodity prices, but as well as that, they've got credit issues. Miners are incredibly hungry beasts for cash. They're usually pretty substantial borrowers from banks and others, and with a dry up in credit, that sort of lending, which is high risk of course, is going to be a very, very low priority. So I think the miners have got a double issue. They've not only got the falling commodity prices, but they will be capital constrained while there are limitations and restrictions on available finance. So they've got a double whammy, a double headwind to fight, and I think we're seeing that as on the chart how badly damaged the Huey index is. We move on next to the COMEX Gold daily chart. You'll recall when we spoke last Tuesday we were calling for lower prices until we got a TO3 signal, and we got that TO3 buy signal on Friday. The market was going straight down, lots of forced selling in there, I suggest, and the next Danielcode price support level on the daily chart was 681.40. Well, on Friday we had a dramatic reversal. The market, COMEX Gold, put in its low at 681 even, just 4 ticks away from the Danielcode number, turned around, rallied hard and gave us an outside reversal bar, which is also a key reversal day, at Danielcode support. Now that's a very, very strong signal. In normal circumstances you would say that's an extremely high probability reversal, and we could look forward to considerable upside from that move. In fact, the next day, Monday, just returned an inside day on COMEX Gold, but you'll note that we like to see confirmation in these markets. If we get a buy signal in gold, we like to see silver confirming it within 1 or 2 days at the most, and vice versa. If we get a reversal signal in silver, we'd like to see gold confirming it. If that doesn't happen, our assumption is that all we're seeing is a market correction. So we're with gold now on the daily chart. We've had our reversal right at the TO3, just 4 ticks away, absolutely marvellous stuff, followed by an inside day and no confirmation yet in silver. So we need to see gold start to move away to the upside if that reversal is to be maintained, and we also need to see confirmation in silver. We need it to reverse and start moving to the upside as well. Absent that, the monthly charts are on a sell signal, the weekly charts are on a sell signal. We can expect lower prices unless this signal holds or we get another TO3 signal later in the week. At the moment, monthly trend is down, weekly trend is down. It's going to take quite a lot of work to reverse these markets.